I actually have a traditional finance background dating back to September 1986 at LF Rothschild Unterberg Tobin. Relevance there. That was early on in traditional capital markets, and quite frankly, they hadn't changed for 35 years. So really exciting to be here, share the story of Symbridge, what we're doing, why we're doing it. And so first I want to point out that anything I say here are my opinions only, and they don't need to influence anyone else. They do not represent Symbridge or anything like that. In the audience, I have colleagues from our team that are down here. Sean Bowden, our Chief Compliance Officer at the broker-dealer, and some others who's raised your hand. Higher. There you go. So any of these folks know this story very well. So it's really fun to be up here after you've heard from luminaries in the industry for the last day and a half. And I usually like to speak first because everything I say that sounds like what I heard isn't original, but I might have said some of it beforehand. I also want to point out a few people that I've been lucky enough to meet before and see here again, see for the first time. One of the nice things about a conference like this is the ability to meet new people. So Eyal and Yaniv from Alexicure, I hope you've met these guys. They're going to be presenting tomorrow. Really cool dudes from California, and they got some really neat stuff that's healthy, all natural, and good. Oliver, it's great to meet you last night. Ralph and Carlos and Joe and everyone else. So if I haven't met you yet, there's still another day, so I'll be coming for you. Let me just pull this up so I can keep cadence with the... So I'm going to share the story of Symbridge. And, okay. There we go. Just tell you a little bit about who we are, what we do, why we might be slightly differentiated, but we're pretty much the same as a lot of the other firms you've heard from that are in the ATS space. So I'll talk about Symbridge, digital asset, digital securities exchange. Underneath that, we have two platforms, two components, Spot Exchange and Symbridge Capital. Get into a little bit about digital ATS, why I really believe the future is here today, and then we'll hopefully have time for any questions if somebody's interested. As well, I'll try to give you a little bit of entertainment and fun, and maybe some tips that help me along the way. But first, I'm very curious, in this room, how many people are crypto native? Show of hands. Okay. How many people are actually invested in crypto? Not everyone. That's good. All right. Well, for those who didn't raise your hands, I'll throw a few things out to you that might be helpful along the way. So the relevance of myself starting in the industry in 1986 at 55 Water Street, where actually DTCC used to be located. Now they just keep a P.O. box there because there was too many people to send change of address to. In the old days, that was interesting. So LF Rothschild was number 20 on the league tables in 1986. By 1988 in the summer, they were sold to Franklin Savings and Loan in Ottawa, Kansas, which subsequently went bankrupt. And that was the sad demise of a really, really good firm. October 19th, 1987 came around, and Dow dropped 508 points from 15-something. And unfortunately, they were not exercising risk management. So that goes into the history books. One of the things that I first did when I got to Wall Street was I was sent to the Securities Training Corporation for classes, and I will say that if you really want to learn about traditional finance and how trades work, the book After the Trade is Made, $65 list price on Amazon is currently trading down 46%. You can get it for $35. It's a really good read because there's relevance to what we need to change to go to the future. So let's talk a little bit about, there we go. Our spot exchange. So basically the assets that we trade, they trade on different platforms based on how they're considered from the regulatory perspective. And cryptocurrencies are traded on our spot exchange as well as asset-backed tokens. So when it comes to crypto, we're probably not the most exciting venue. We don't have a deep list of assets, but we do work with the large cap cryptos that you can write futures on because the folks that we work with and serve, that's what they're used to and that's what they're looking for. Something that might be unique for us is we also have a lineup of asset-backed tokens based on precious and base metals, all the metals that you need to decarbonize the planet to make an electric vehicle battery, solar panel, wind turbine, all sorts of other cool stuff. We have already put on chain an asset-backed token on Palladium. We actually redeemed 1 troy ounce of Palladium. They burned the token itself, and out of a Swiss vault came 1 troy ounce of Palladium through the mail to the United States. 2.5 weeks later, with a little bit of nervousness in between, it arrived at our office in Greenwich, Connecticut. 1 troy ounce of Palladium, I think was around $2,300 at the time. You could probably put it on a chain and wear it as a pendant. It's not that big. But we had it was a proof that we could actually do that. So we'll be rolling out platinum, gold, nickel, cobalt, copper. I believe we might even see the likes of some lithium as well. So pretty cool stuff. That's about it for the spot exchange. So Symbridge Capital is a FINRA member firm, and we're approved for private placements, debt equity, and digital securities, which is a pretty cool and neat thing. This was filed with FINRA, so I will stick to the slides, but broker-dealer is, as you know, it's either an agent or a dealer. Allows us to do some traditional work, assisting issuers to structure prospective securities transactions, helping an issuer to identify potential purchasers, soliciting securities transactions, and receiving transaction-related compensation. So, all traditional kinds of things. We are capable of doing analog private placement work, and as we just saw some of the most innovative technology in private placements in the prior presentation, the biggest innovation in private placements in the last 40+ years has been DocuSign. So a little more disruption I think would be really helpful, and all the things that we've been talking about and hearing about are coming this way. Let's see. Here we go. What does that say? Yes. What is an ATS? So an ATS is an alternative trading system. It's a trading venue that is more loosely regulated than an exchange. It's a venue for matching large buy and sell transactions. It's not as highly regulated as exchanges. ATSs have some interesting naming on them, dark pools, lit pools. You got to love the way Wall Street comes up with these wonderful, wonderful descriptors for the types of things we do. At least we don't see death spiral financing on here for the pipe business. And SEC regulation establishes a regulatory framework for these trading venues. So you have to have a broker-dealer, and then you file for ATS approval with the SEC. We achieved that thanks to Sean Bowden and the team. Many people working for, I don't know, was it 20 months to get there or so? Working hard every single day. So very, very happy about that and the things we can do there. And why does an ATS matter? What is important about that? Why is using a broker-dealer matter? The digital asset industry is receiving increased regulatory scrutiny, and broker-dealer ATS is a regulated path forward to digital asset issuance and trading. What is the relevance of that? The Polynex order, well, that was a letter that came with a $10 million invoice attached. BlockFi order, that was a letter from the SEC and then from a number of states that added up to $50 million to the federal side and $50 million to the relevant states. $100 million bill for that. Coinbase gets a Wells notice to preempt their issuing a lending product that would typically require a bank charter or something a little more innovative than just going in that business. Coinbase class action is, I believe, a whole bunch of their clients are actually going after them because they were selling unregistered securities. That sounds interesting because the very users themselves were actually active buyers and wanted to buy this stuff, but I guess they got a little upset about maybe the phone's not being answered or emails not being returned. Other investigations going on right now, Celsius, Gemini, Voyager Digital, and a lot. So we've always believed that if you stay in the regulated markets, you're not going to get in trouble. If you sell a security that's exempt from registration, you're not going to get in trouble for selling an unregistered security. Things like that just make a lot of sense. The future is happening today. After a long and maybe not so storied career, but after 3.5 decades, to get to the future was really exciting to me. I'd always been leaning into the digital asset space and actually met Dave and Quantum back in 2018 at Consensus in Marriott Times Square. It was interesting because I went there for one reason, and that was to hear Jay Clayton on stage when he was the sitting chair of the SEC, because I was really interested in what the regulators thought about this. To my, not shock and not even surprise, when he was asked to come up on stage, half of the people in the audience left. So I was in there, I sort of looked around and I saw Dave and Quantum, and they were sort of sitting there like hugely attentive. So after that presentation, I went and introduced myself and met them. And I then started to see Dave at all these various conferences I would go to. It started with people that were in pinstripe suits and talking about how this whole industry was going to get digitized. And over the years, we saw younger and younger people showing up, less suits, no more ties, more casual dress. And it's really, really thrilling to be here, to be on the pathway to become part of the ATS selection program with Vertalo, and to be working with people that I've met at the very beginning of their journey to do this. So, not teaching anything here, but generally, if you look at tokenizing assets, it probably correlates to assets and where they are. So largest asset class in the world is global real estate. It's over $230 trillion or thereabouts of assets. Then you have bonds, 92 trillion, equities, 70 trillion. You can add up equities and bonds, you still don't touch real estate. So it's not a surprise that a lot of the folks in this business are looking at tokenizing real estate. It's not a surprise that real estate owners, asset owners, are looking for the tokenization path. It's interesting, most people have even forgotten that in October of 2018, the St. Regis Hotel in Aspen, Colorado, the owner needed some liquidity, didn't want to go to a bank and get a bank loan, the senior lien, and subordinate everyone else on the cap stack, and didn't want to get a partner who was going to come in and say, I'm going to sit in your boardroom and board meetings, and my spouse, be it male or female, is going to come in and suggest that maybe you should redecorate the lobby. No, not interesting. So I believe they floated around 15%, sold their tokens at $1, and it was really just for use of the hotel and getting a discount when you stayed there, which quite frankly, if you own $500,000 of Aspen coin and it was in your name and you made a hotel reservation in your name, you took your family over the holidays for 10 days, you're probably walking out of there with a $35,000 to $50,000 bill. Within 15 days, you'll get a check for half of that because you're an owner. However, that's about it. The owner got not only 15%, I think it was around $15 million, don't quote me on that because it could be wrong, but the concept's the same, and got a valuation on the building versus getting an appraisal, which might have rivaled the cost of doing the tokenization. So real estate logically would be there. Security token offerings is really just taking an equity that's still private, and as if you've read the white paper from Vertalo, the Gulch of Death, companies that are billion-dollar valuation, too big for M&A, too small for IPO. The amount of private assets are growing at a faster rate than the growth rate of exits. So this is a compounding problem that's getting bigger and bigger. This is a great solution for it if you want to learn a lot about security tokens, security token offerings. I've been a big fan of Alex Nascimento, who's a professor at UCLA, very prolific in the STO space. And if you're hitting up Amazon to get, after the trade is made, for another $36, you can get his book, The STO Financial Revolution. I'm not paid to say this, I just think these are helpful things. In the tokenized private funds, I think that's one area that we are not differentiated, but that's where we're focusing our efforts. I have, although I was branded with my background at John Hancock, that actually was a shorter stint. It was 19 years, and then get out there and start my own business. I've been in the placement business. I've been in the cross-border transaction business. In the placement business for private funds, it is a lot of fun, and it's an area that we have some relative expertise in, and an area that we're leaning in heavily. Market access to crypto funds, DeFi funds, Web3 funds is really limited. Where do you go to find these things? You can probably get some proxy products or some trust products or things like that, but not a true fund managed by a fund manager that has expertise for a number of years. Might have a hope and a prayer of passing operation due diligence at a financial institution, and there's a handful of them out there, and we're talking to a few of them, and really happy if we can work with them as an analog private placement agent to help them raise capital, as well as if the opportunity makes sense, to help them find the pathway to secondary market liquidity through tokenizing and then direct listing on an ATS such as ours. So there's a few things that come in the fund distribution business that are kind of interesting. You don't avoid any of that when you're doing this. The tokenization is sort of like a secondary securitization of the LP shares. It's a great article, which anyone wants it, I'll leave it up front here, or at least you can find it. But do crypto hedge funds generate alpha, or are they merely providing beta exposure? Well, I suppose it all depends on what the manager is doing. And most of the managers I'm talking to actually are doing some pretty interesting things. I'll give a shout out to Symbridge Capital and Tanya Reif. She's a foreign exchange trader for probably 20 years. Was born in Venezuela, grew up watching her country's currency absolutely just dissolve. And then she went and in her education went and got I believe a master's, if not a PhD, in currencies and things like that. Web3 DeFi fund, she's working with all these different assets. That's really, really cool, and it's really cool to talk to somebody that's looking at it from a perspective of traditional finance. So another one that I'll point out is finally we saw the Standards Board for Alternative Investments come out with operational due diligence of crypto assets. This is actually pretty helpful because ODD for a crypto fund is a little bit different than ODD and investment due diligence for a traditional fund. I was at the AMA, Alternative Investment Management Association Digital Asset Summit in New York. I believe that was a week ago, this past Wednesday. Seems like a month ago. And they had a panel of DeFi fund managers up there, and they all, in concurrence, said they spend over 40% of their time on risk management. And if you're not doing that, it's really, really hard for anyone that knows this to believe you're doing what you're supposed to do in your job. We all probably know of what happened, not just with Terra Luna and that disaster, but if you ever happen to look at Axie or AXS, and you understand that there was a bit of a problem there, and it wasn't the protocol, it wasn't the terra firma over here or the terra firma over there, solid land. It was the rickety bridge in between that nobody had done anything to audit how it worked, to go and get somebody to look at the code, look at the smart contract code and all that, and look what happens. It was a breach. It cost some people a lot of money. Fortunately, not me, I think. I don't know. Still trying to figure out where my staking position is. But so anyway, we're probably getting close on time. So access to secondary markets, if you haven't, if you've been listening for the last day and a half, you understand this concept. It's not the concept, it's how do we get there and what do we do when we get there? Things like liquidity, things like active users coming into this. I know it's all gonna happen. Being an accredited investor today, well, many years ago I said, with enough inflation, we'll all be millionaires. The accredited standard is actually not so high relative to the people that want to invest. In the traditional hedge fund space, it used to take $78 million to get a diversified portfolio of hedge funds because of the minimums to get in there. Today, people might want to plunk down $10,000, $25,000 into all these different things, and I can see that that's where it's going to lead to. So I'm going to end on something that usually gets me in big-ass trouble, but I'm always curious, and I mean no offense, please don't let this ruin everything I've just shared with you. Who in this room knows what a nunce is? Couple, thank you, someone from our shop. Who knows what a Merkle root is? Okay, two hands. How long does it take you to read 9 pages? You can just keep that number in your head. How many in this room have read the Bitcoin white paper? I'm just saying it's 9 pages. You can download it on your cell phone. It is technical in nature, but you'll see on page 2 the word nunce. You'll see on page 3 Merkle root. These are things that, I mean, if we're going to be in this industry and we're going to prop it up and make it happen, these are really, really helpful things to know, even though you don't have to, but I always found that helpful. And the other thing I'll give a shout out to is the MIT Media Lab cryptocurrency course, taught 6 weeks, short course, online, is interactive with other participants. But at least it's nice to hear somebody who is the former chair of the CFTC and the current sitting chair of the SEC talking about cryptocurrency like he loves the stuff, and he does. He just wants to regulate it now. At any rate, open to any questions. Our team is here. We have a table outside. We have a 2-page piece on who we are, which is a lot shorter to get through than listening to me. And all right, just like texture, nailed it. Thank you guys very much.